Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Tuesday, December 11th, 2018. I wanted to do a quick update. We'll keep this video relatively brief, just update you where the broad markets are at right now and what to expect going forward. Um, Before I dive into the charts, I just wanted to reiterate that I've been covering, QQQ SPY as I always do on a regular basis, and however, although I've seen some things in the last couple of days that firm up at least the near-term bullish outlook, and certainly there's certainly the potential for more than just the very near term. I always try to differentiate my time frames. They're very important. Near term, very short term. Sometimes I'm focused on trade ideas that might be expected to last even just a few hours or maybe a couple of days. Intermediate term, typically days to weeks, and longer term, months to possibly even years. So right now, the markets are still in this big sideways trading range we've been in for a while, and nothing's changed on my longer term outlook. That hasn't changed. So I just want to make clear that although I keep talking about the bullish case firming up recently and the potential for a December rally, um, that is the reason that SPY or QQQ or any of these index ETFs are not official trade ideas is because number one, there's still plenty of work to be done to firm up the bullish case. I've noted some bullish developments recently, but those we've also had a lot of single, 2, 3, even 4-day bullish technical events, things like that that have happened, and then those were followed with very impulsive selling. So far today, the rally has been met with some pretty impulsive selling, as you can see here. But again, the official trade ideas on the site, they've been light. They've never ever, since I started the site back in January of 2012, never have we had such an extended period of time for so many weeks with so few trade ideas. It's unprecedented. And again, that's reflective of current market conditions. I've talked about it for the last few months. Finally, in the last couple of weeks, I've seen numerous articles come out in the financial media, the Wall Street Journal, Barron's, and other media outlets talking about how for the first time in decades, and we've rarely seen this, cash is king. It has outperformed all asset classes this year. Everything: stocks, bonds, corporate bonds, junk bonds, treasury bonds, gold, and that is very, very unusual. You'll see that 99.999% of the time there's always somewhere to be making money. And even in the meltdown in 2008, treasury bonds were rocketing when stocks were falling. So this has been a tough environment. And the thing is, obviously there's been shorting ops and we've taken advantage of that. But when you get in these grind fests here, and as far as the swing trading or trend trading goes, the trend has been for months now, although off the highs it's been down, but the larger trend is mostly sideways here, and this is the going back to October here. Well, that's to the left of the chart. And we've had these micro trends, which we do, I've done a pretty good job of navigating these, identifying these, before and during while they're happening, getting in and out of the tops. But this is not typical swing trading time frame. The majority of the investors and traders on the site they're not full time. There are some full time traders on the site, quite a few, but many are typical swing traders, and that's what right side of the chart is primarily about. And swing trades are you're trying to capture a trend that can last typically several weeks, sometimes a few months. And so these are certainly rapid swing trades, if you can get in, get out here, but you're talking just a few weeks at most on these trends. And I just wanted to clarify that again, that I am very eager to start finding some swing trade ideas, but they will have to align with the outlook of the market or the sector or a particular stock. And what's going on now with this unwinding of the credit bubble, the margin bubble, a lot of hedge funds and pension plans reducing their equity exposure. Finally, we're getting that shift towards there's finally now talks about, well, when's the next recession coming? A few months ago, oh no, there's not even close to a recession on the horizon. I couldn't find anybody, not even the most bearish economist or analyst, talking about a recession anytime soon. And now you're seeing that, and that's what I said would happen. The market would go down, and then you'd see economic growth revisions revised downward. So this is an adjustment period in the markets right now, and until we, have some pretty clear direction where the next trend will be. Right now, I'm just looking for a possible rally, whether we're going to get it now, whether it started yesterday, or we have another leg down. I think the next tradable trend will be to the upside. And I just want you to know, once my degree of confidence is high enough, then I will look to add some official trade ideas. Now, as far as stocks go, with this unwinding, we're also seeing the unwinding, and I've talked about this in the past, of what I call, and I think others have called, the indexing bubble. Unprecedented trend towards index investing in the last decade or so, away from actively managed funds. Actively managed means a mutual fund manager is a stock picker trying to, do his or her homework, kick the tires, buy the best companies that look like they're going to go up, sell them when it's time. Whereas there's been a tremendous and again unprecedented shift towards index investing, where people just put their money in the S&P 500 index fund or buy the SPY, QQQ, and that propelled the market to the level that we're at now, or we saw recently. But it also works in reverse. When money comes out, everything gets sold indiscriminately, everything in that index, because that's the withdrawals are coming out of there. So the components get sold proportionate to their weighting in the index. And what I'm getting at here is that makes just about all stocks are going up and down with the indexes, with these strong swings right now, with the algos trading the futures in the in the index ETFs. So therefore, um, it would require a tremendous amount of effort, and I don't think it's worth the effort and the focus to look at individual stocks, unless there's something that really flies under the radar and is not a big or a component at all of an index. And if I come across that, great. So until then, let's focus on the indexes, and once we get a pretty clear direction, and when we get that point where I think we have an objective entry for a long or short, whatever the next opportunity is, we'll go ahead and do that. And on a final note, the difficulty where we have nearly all asset classes falling, which has been the case recently, that will not last forever. There will be opportunities soon, and there'll also be some opportunities in good old-fashioned stock picking, because nothing lasts forever. It's just been a difficult environment recently. All right, let's move on. Okay, so a quick update. These are the charts that I posted this morning before the market opened today. That was about a little before 8 o'clock, just to give a heads up on what was going on. So on the NQ, I had a downtrend line here, and that was taken out last night. And this was in yesterday's video as well, as downtrend line. So we broke out, hit that 1774-ish level. They popped a little bit above it and had a pullback as expected. And I still favor this scenario, pull back and another thrust up. But I'm going to talk about that right now and what's going on. This pullback's been a little more. It's gone a little bit farther than I thought so far. Not too far. Well, again, we'll get to that in a second. Let me just finish the charts here. And this was a SPY. I had both of those at the time I put this up around 8 in the morning. They were at resistance. They held that level, and so my expectation was for the next hour and a half, which did happen. They kind of stayed flat. The futures stayed flat, and the markets opened up around those levels. Maybe went a little bit higher after that, but then reversed. So this is about where we're at now. In fact, I'll get to those charts in a second. Let me just go through. Well, we'll look at the SPY and QQQ here in a second. So we've got to go to the NQ. So there's what happened from this morning. Let me zoom in a little bit. And this is NQ. So you can see we overshot that level by a little bit and then reversed. And so now we've pulled back to support. And I'm going to get to QQQ and SPY in a second, because I believe those are important levels to watch. We're pretty much have backfilled today's gaps. So this is a pullback to support. Again, it went just a hair deeper. I had it going. I didn't think we'd get a full backfill, but I said, in the trading room, that would certainly be objective if we got it. I just figured and I was hoping to keep the bullish case pretty strong. I would have preferred to see the buyer step in aggressively on a partial gap backfill. My reasoning was because everybody's expecting a gap backfill. It's almost too easy. And so far today, it looks about that. That might be what we have. We'll get to the indexes in a second. So either way, this is still my preferred scenario. If we get taken out, if we continue lower, I should say, 66, 64. That's still a pretty important level. And again, one of the reasons I am not adding official long trade ideas, we're still precariously close. We're sitting on, yesterday we were at the, edge of a technical cliff on the markets, these recent lows, and we're not far above them now. So it's still anybody's game. Again, 1 or 2 days does not make a trend. I have seen some bullish developments. I do lean towards more upside. I'm still leaning towards, is that scenario this morning, another thrust up here to about that 68.53 level, at least. And that has the potential, if it does happen soon, if we get some impulsive push up there, especially if we were to hit that today. I doubt it. It's about 120 right now. Anything's possible. But today or tomorrow, that would be pretty impulsive, and that would be bullish. So again, I'd expect a little pullback there and maybe more. We're going to have to take this day by day right now. The market, the developments are very rapid, and I've also mentioned this. Somebody asked, I mentioned how last week, going into Friday, I was bearish looking for more downside, and then all of a sudden, based on what I saw Sunday night and early Monday morning before the market opened, I flipped back to near-term bullish. And I say this very often. The markets are dynamic, and so is my analysis. I've learned years ago one of the biggest hindrances to trading is confirmation bias or getting stuck on whatever view you have, whether it's bullish or bearish. So I'll flip-flop, and I don't even put a second thought into it. And it's made me a much better trader than I used to be, whether, if I was trying to defend a bearish or bullish outlook despite what evidence I was seeing. So again, if the charts change or something changes, or I see something I missed before, no problem. I will, revise my outlook. And so to make it clear, if I'm not being clear right now, my very near-term outlook is bullish. Intermediate leaning that way too, but my degree of confidence for January rally, it's decent now, but not strong enough. And it may be. I may finish this video and put out a long trade on QQQ or SPY, or maybe I wait to see how the week finishes, or we don't get one. I just wanted to share where I'm at right now and my thought process here. And also, again, remember, day to day, day in, day out, throughout the day, I'm going to post technical analysis, market analysis, give you my thoughts. And if it's making your head spin because you're not an active trader, ignore it. I put the most important things out on the home page for both silver and gold members, the most significant market developments, and I try to do my best to differentiate between very short-term analysis and expectations of what the market will do or might do, versus the longer term or intermediate term. And when you start seeing the official trade ideas get layered back on, and if you've been with the site long enough, you'll notice we'll go through a period of very few trade ideas. All of a sudden, boom, boom, boom. Within a week, I threw out 3, 4, 5 new trade ideas, and there might all be let's say longs in one certain sector, or maybe all in commodities because I'm seeing some developments there. And at that point, you'll get a pretty good idea that, hey, Randy thinks there's going to be a pretty big move here in the agricultural commodities or whatever, gold mining stocks, whatever it is. All right, so just to wrap this up, so you have this downtrend line and then Q that I showed before. We broke out, and basically we're coming in for a back test now. So if my preferred scenario plays out, we should reverse soon with another thrust up here to at least that 68.50-ish area, 68.53, followed by a reaction there, and we'll take it from there. If not, and there's certainly room for a little more downside if it wants to continue to back test, but I would like to see this level hold. Remember, we're not far below the recent lows here, so the markets are still in a very precarious technical posture. And at any moment, and if the last few months if they've taught us anything, it's that be careful. Don't trust bear market rallies. Don't trust these counter trend rallies, because out of nowhere they can and often have been sold into very quickly. So with that being said, we'll leave it there. Let's go look at ES real quick. ES was, let's start with the post from this morning again. That was right here. Showed this scenario 2670 right there, pull back, and then another thrust up. That was again posted around 8 o'clock this morning. Where we're at right now is this. There's that 2670 level. We popped just slightly above it, and I have since, the only thing I've changed on this chart is I have added a downtrend line, because we now have a third reaction. I like to see 3 reactions to help validate a trend line. So now this is a level to watch. And by a level to watch, you can take it any way you want. If I'm bullish and I have a trend line, then what I look at is I wait for a break above the trend line to trigger a buy signal. And if I'm bearish, I look for a bounce back to a trend line as a potential shorting op where you can short at the trend line with a stop placed just slightly, somewhat a little bit on the other side to prevent, to avoid any whipsaw signals or false breakouts, give it a little bit of room. And so at this point in time, and that could change by the end of the day here if we continue down or tomorrow. But as of now, I'm looking for another thrust up. And the scenario that I laid out this morning had us going up to this 2670 level, about where we were in this morning around 8 o'clock before the markets even opened. They inched a little bit higher, and there's that pullback I was looking at. Came back a little bit more than I expected, but not much. In fact, I think we probably backfilled SPY and QQQ gaps now. So here's my preferred scenario remains another thrust up here to 2696. And like anything, don't get married to it because we have very critical support down here around 2625. We violated that support recently twice. So it's not a line in the sand support because we've gone down through there just like we did here. But I would say, let me just make it very simple. Not good. If we break 26.25, not good for the bullish case, even though we could spike down through there and snap back up. But ideally, you want to remain above there, and especially after what just happened here, I don't want to see us pull back much more than where we've done. We're starting to stretch the limits of the pullback that I think is healthy if we are going to get a December rally. So if nothing else, my near-term bullish outlook has become tempered from the extent and the impulsiveness of this pullback. So let me just say that I'm a little less bullish right now than I was this morning, if that makes any sense. Haven't given up on it yet, but I'd really like to see its reverse soon. And if we close somewhere in here today, I'll probably just go home flat. It's just not worth it. It's a crapshoot whether we'll gap up or down tomorrow. Okay, let's look at the broad markets and we'll wrap this up. SPY, or the broad market ETFs, that is. SPY, this 60-minute chart again, this was posted this morning. And this was as of, since I screenshotted it at a little before 8 o'clock, it shows as of yesterday's close. And so I had the arrows here, and I told you the futures were at resistance, so I expected a pullback there. You can see it drawn right around the middle of the gap there, because I had the resistance zone. When I have two resistance levels in close proximity, like I do here, I refer to that as a resistance zone. And so that is what happened. We went there, pulled back, and again, we pulled back a little bit more than that I had anticipated or would have preferred to see to keep the bullish case strong. But at this point, I still favor a thrust up there. And let's look at the chart. That would be right here. SPY, we're just looking at. So there it is. I zoom in, you can see that we did indeed reverse right around the middle, right between the two support or resistance levels. And we pulled back, and we've now backfilled the gap and just a little extra there. You can see the dotted yellow line right here, if you can make that out. That shows you yesterday's close. So that's a complete gap backfill. Now what's interesting, we shot through it twice already when you look at these 60-minute candles, but those are candlestick shadows right there. That means we shot through there and snapped right back up. So the last 60-minute candle closed right above the gap on a gap backfill, and this one so far is right on that dotted line, if you can make it out. So far a full gap backfill. And right below that is that significant 263.15 support, and I want to see that hold. If that doesn't hold, not good for the bullish case. We could come down, make another test of the lows. I don't know if I would short on a break of that. I would probably just sit back and wait and see what happens. I just want to make mention, ideally for the bullish case, we need to reverse here soon. Again, ideally, to make things look good. See the buyers step in, especially, nice impulsive ramp up today. If we could take out today's highs with only an hour and a half or so to go in the trading day, all the better. If we don't, leaves things still, like I said, it's been, even with the bullish price action yesterday, I continue to say it's still anybody's game, bulls or bears. There's still a lot of work to be done to firm up the bullish case and the case for a nice Santa rally or rally into December. So that's SPY. Now let's look at QQQ, and then we'll wrap this up. So SPY chart here, there's QQQ. Again, this was as of yesterday's close. This is what I posted this morning. Had us going up to 166, reversing there, coming back in, and then another thrust up to 168.49. So as of now, it's pretty much what happened. You can see we popped up, reversed right around just a hair below 166, came back in, not a full backfill on this QQQ yet. And I made mention recently, and what I've noted is that the big market leading FANG stocks and a lot of the tech stocks have been resilient and doing better lately. It's been the financials and energy and some other things dragging down the broad markets. And so, I'll always keep an eye on both SPY and QQQ, but so far this is pretty healthy that QQQ has yet to even make a full gap backfill. Again, you can see the dotted yellow line, that's yesterday's close. And so far we're still above there. So again, if the buyers can come in here and step in here aggressively, ideally today, run it up by the close. Again, ideal if they could take out today's high and even that 166 level. And I'm still leaning towards that way, that scenario, and that would take us up to about 168.50. And we'll just, again, if we get it, we'll go from there. If we don't get it, and we come on down and break 162, which is support, not good for the near-term bullish case. And again, you remember with the stock market and trading, it doesn't have to be all or none. It doesn't, in other words, I don't have to be long above 162, and if we cross down below, it's short. If I start to see some, mixed signals, a little ambiguity here in the markets in the near term, then I just step aside and I let the charts set up and wait for the next bullish or bearish entry. And again, I'm talking active trading mode. Swing trading, where the next 5+% is still not very clear. If it was clear, if I thought I could tell with a high degree of confidence that the next 5 to 6 or 8% or more on the broad markets was going to be to the upside or downside, then you'd have an official short trade on QQQ or SPY or whatever it was. All right, so let's wrap it up here. Those are the levels to watch. And again, some work to be done. The day started out pretty good, and it's not over yet. Like I said, SPY is just coming in QQQ to make some gap backfills, which is healthy and normal if they hold. If those gaps are backfilled or nearly backfilled here in QQQ, and we can get a reversal, especially some impulsive buying up into the close. And again, see how they close the day. Right now QQQ is positive. SPY is turned red just slightly. So we'll see how we close the day, and if anything significant happens, I'll do a market update. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.